points, like I said, just for the namesake. Because once you tell your friends, I learned technical analysis. What was it? What's this called? सीखा क्या फिर? So this is again one of the namesake points. ठीक है, it was first recorded in history in Japan. So today it is used worldwide. So exactly, that is only one thing, maybe one learning out of that. You have a lot of names which you feel that what nonsense name is that, but then it's a Japanese word. Like it's a Haikanashi. What is the meaning of? So it's a split word. Haiken means something and Ashi means something. You want to learn that, or you also want to learn a pattern which is known as bullish harami and bearish harami. These are the two patterns I want to learn, and it's not my fault. I'm not named it, but that has a very different meaning in Japanese. Okay, so not a bad word. Okay, so what is that and all that? Different, very weird names you will find in technical analysis. It's all because of Japan. Okay, then after Japan, people believe that it was then discovered in USA by Mr. Charles Dow. Dow Jones, you might have heard that, Dow. And a very interesting point is this, because why technical analysis was so very important at that time? Because right now we have SEBI in India. Right now we have SEC in the United States of America. You know what is SEC? Securities Exchange Commission. Like we have SEBI in India, there's SEC. Now SEC mandates that you have to publish your balance sheet, you have to publish your P&L, you have to publish. There's not a analysis, right? Back then there was no SEC. So companies never even disclosed their financial statements because it was not mandatory, it was not required. Then as an investor, how will you organize without any information? But there was one information which was available. Yeah? How? Bhagwan ji. Correct. One price, one information was available, that is price. So now these big people say, okay, if we don't have the balance sheet, if we don't have the P&L, if we don't have the cash flow statements, we'll try and analyze the price. We'll try and analyze the price patterns, and we'll try and predict what can happen in the future. And that is what these great people are doing. And Mr. Charles Dow, he was the first one who said that, okay, we'll try and do something. And if you have heard about this, the Dow theory, he came up with the Dow theory. We will discuss about Dow theory. So we also said that Dow Jones, DJIA, and Dow Jones Railroad Average, all these are named after the same person only. Okay, just additional piece of information. So what did the Dow theory tell us? Okay, now please understand one basic point. With Dow theory, we will not be in a position to guess, okay, this is the price at which we should enter, this is the price at which we should exit. No, Dow theory tells us an overall sentiment in the market. You should be clear about this in the beginning. Everyone, one more time. Will Dow theory, so you have the Dow theory, you understand, okay, now I understand what is Dow theory. Will you be able to take a buy position? Will you be able to understand, okay, this is the, as per Dow theory, this is the point where I position. Not really, not exact price points, but you'll surely understand the sentiment, you'll surely understand where we are right now. And based on that, you may decide that, okay, this might be a time to quit or this might be a time to enter. Okay, so first I tell you, what does the Dow theory tell us? As per Mr. Charles Dow, he said that there are three major trends in the market. Okay, which are the three major trends in the market? One is known as a primary trend. Just trying to zoom in. Visible properly now? Yes. One is known as a primary trend, one is known as a secondary trend, and one is known as a minor trend. Now what is the primary trend? Primary trend is like a long trend. Trend which we can see for 1 or 2 years, or more than that also. Minimum 1 year. Okay. But now for those who are learning this for the very first time, you might be like, what is a trend? Okay. In simple words, right now if I ask you, have the prices of petrol been going up or going down? So can I say there is an upward trend in the prices of petrol? Right? I took an example which is very close to the heart of every single person right here. Okay. So what do I mean by trend? Trend is the overall direction. For those who don't understand the meaning of trend, if you want to write down first time if you read this, trend means what? Overall direction. Okay, so what is the primary trend? Primary trend is the overall trend. It's a long trend basically, last 1 or 2 years, bada trend. Okay, now if I talk about the secondary trend means what? Corrections in the primary trend, maybe few weeks to few months. Okay, once we visualize this with the help of chart, it will be much more clear to you. Right now, what you have to understand, primary trend means what? A big trend, long term trend, more than 1 year, 1, 2 years or more. Secondary trend is comparatively smaller, few weeks to months. Okay, and what is a minor trend? Minor trend is like day-to-day fluctuations. So are we moving from somewhere around years trend to months or weeks trend to a day trend? Correct? That is what these are the three trends that overall Charles Dow put in his theory of Dow theory. Okay, and in that he said in these trends we can see 3 phases. Now this is something amazing. I'm going to show this with the help of charts also. He said in all these trends, be it primary trend, secondary trend, minor trend, if I focus properly in bull phase, in bull market and in bear market, I can see these types of phases in the market. Which are these phases? One is the accumulation phase, one is the public participation phase, one is the euphoria phase, and one is the distribution phase. And I'm sure you have understood nothing. Now you'll understand everything. Okay, I want 100% attention next 5 minutes. You'll understand this easily. Okay. Typically what happens in case of, if you see the chart is divided into 2, you can see this vertical line, correct? On the left side, here we have the bull market, and right side we have the bear market. Bull market is typically in which trend can I say? Upward trend. Like example that we took off was of a petrol price, upward trend. What do you think smartphone prices? Smartphone prices, but I can say once launched, for example iPhone 11, once it was launched, now the price of iPhone 11 has decreased. After maybe 6 months again, iPhone 11 price will again decrease. So that will be what kind of trend? That will be a down trend or a bearish trend. Is this okay? Yes. Now, what all are these phases? First phase is known as the accumulation phase. Only and only smart people, super smart people. Example, none of us. They are the ones, big institutional players basically, who have a lot of insights. They'll be the ones who will identify the trend at a very early stage. And they'll be the ones who will be jumping into the train which is going to go up. They'll be jumping into this train at a very early phase. And that is where they start their accumulation. They start buying. That is why the word accumulation. They're buying and buying and buying. They start first step. Now again, more demand. If demand goes on increasing, the price ideally is going to increase. Correct? So this is the first leg, I can say. This is the first leg, which is what? Which is the accumulation phase. I think this is also super important. This line. Why is this important? Because market will never go in a straight line. Never. It will show some correction. Okay? So basically such corrections give us an entry point again. For those who believe that, I missed the rally. I should have bought this stock. But it's just going up and up. If it comes down by even 10%, I will buy. Have you experienced this? Many times? Yes? Right now, you're like, maybe just 6 months or 8 months before, you might be like, even if this stock corrects by 10%, I'm going to buy. It corrected by 10%. You bought it. Another push it. It has gone down by another 30%. Okay, can happen. That is more like a bear market. Can be more of a right-hand side phenomenon. Okay. So these small corrections are actually healthy corrections. If any financial asset goes directly to the moon, no crypto enthusiasts in this classroom, it seems. To the moon is a term which is very, very much used by all the crypto enthusiasts. Okay? So to the moon means what? It will not stop also. Ek baar chalu ke to boom, ekdam full to the moon. Okay, Dogecoin. And now moon is Amasya. Okay. So whenever we are talking about a one-sided market, is that a good market? Never. There have to be some dips. Small dips are always healthy. They'll give a chance to people to book profit. They'll give a chance to all the Dukhi Atmas to enter, to miss the trade. Right? Now you can imagine all those Dukhi Atmas, yes, now I believe I can start my journey. So this is where can I say demand will shoot up again. Okay, so this is the phase which is called as what? Participation phase, where some, now here I can say we all people, who learn stock markets, who don't go by tips, who don't always refer to their friend Tipendra, who understand, okay, there is a great chance that because of XYZ factors, markets might go up. So we might not be able to catch the train so early at the accumulation phase, but surely with good analysis, we can enter at the participation phase. Okay, now what happens, again, you can see this amazing journey, we have enjoyed this. Now you keep on telling your friends, you know, I got 12% profit. You are very happy, you are, certainly you are. Who is very unhappy? Friend. Because friend is the one who did not participate in this. Friend was not aware about anything. And you will not tell that you have enjoyed profits from here to here. What will you always tell him? You know, it started from here and it's going to came here. And the friend is going to be like, FOMO. Fear of missing out. My God, I just missed it. But then, being a very informed investor, Manju Mikilani, you also wait. There will be some correction. Wait for the dip and buy the dip. Okay. And you see some correction here. And then you're going to get calls every day from this phase to this phase to this. Don't go back. Don't go back. So your friend is with us, maybe somewhere around here or whatever, because of your advice, as your friend enters. This is the phase which is called as the euphoria phase. The word itself says it. Those who don't understand even anything about stock market, they'll be like, they're confident it will go. If someone asks, how? It has gone up from this level now. It has to go up. There's no choice. In simple words, can I say the most learned people, absolutely learned people, I can say 3-star people, they enter in accumulation phase. Above average, we enter here. Who have no knowledge. Only based on tips, we enter here. And if you've seen my merchandise, market goes on the top, people say, I buy, and it goes down and people say, Asa kasa kai. So that is what happens with many people, right? That we enter into some specific stock, and from that very date, someone came to know that I bought it. And from that very day, it starts going down. Has happened with every one of us. Is there a problem with the stock? No. Is a problem with the phase where you entered. You should never buy in euphoria. Euphoria is the absolute ultimate point of FOMO. Fear of missing out. Ultimate point. And it's not only in the case of stocks, it will happen with every other asset class. This is a phase where everyone wants to get rich quickly. Correct? So whenever markets have gone up like anything crazily, it's okay, happens. You have to tell yourself, this was never for me maybe. I just missed it. It's okay, happens. I'll wait. Those who entered in that March 2020, the amazing phase, they've seen the markets go from such a low level of 7,500, 8,000 roughly. And with very minor dips, it went up till almost, first rally was direct, sup. If you remember in my basics of stock market, I also told you, the fall and the recovery happened in like 8 months. So always remember, once this is done, it will be just 100% of euphoria and people are going to end up nowhere. Okay, now what happens here? It means here, at euphoria, who's going to enter last time? Tell me who's going to enter? The FOMO guys are going to enter. Who are going to be the smart people who are going to understand, okay, kache kila market mein. Those who don't understand anything, they are coming here into the market. So they are going to be the ones who are going to be the sellers. Are you getting me? They are going to be the ones who are going to be the sellers. And they say this is the distribution phase. Why? Whatever stocks we have, who are we? The 3-star people, FIS or DI, the institutional investors, big players. We are going to distribute our stocks. They are going to sell our stocks to those who are not learned. Have you understood the meaning of distribution phase? Yes. Now what happens is that once selling starts, it has gone down to this. Okay, as I mentioned, it will never be like down directly. So here you see a little bit of up move. Again, a downward journey starts. Now, people like you and me who understand markets have come off from the top. Plus ABCD news, which may take the market down further. That's where we also participate in the buying or in the selling. And market goes down further. Who are these people? FOMO people. What is their understanding about stock market? It's a gamble. Why is it a gamble? Because I bought it here, and right now it is here. Why? You entered in the wrong spot, but they'll say stock market is a gamble. So the most learned people and the least learned people in stock market, when they enter, when they exit, is what Dow explained. And when did he explain this? In his Dow theory. And this is way back in 1890s. आज भी relevant है. Today also relevant. Was this seen somewhere as a typical this similar point that I'm talking about, this similar phase? I've just drawn. Some charts might not be there in your notes, but you will surely see here. Okay, some might be there, some might not be there. Okay, but I would request everyone focus on the screen because what we try to do, this, same. That's what I've printed. What you can see on the screen. Okay, so just try to focus on the screen. That should be more than enough. Okay, so here you can see which year am I referring to. This is year 2005 that I'm referring to. Okay, from 2005 started the accumulation phase, little bit correction. Then the participation phase, a very minor correction. Then the euphoria phase. Can you see this is just before 2008, Lehman Brothers crisis. This is 2008 Kalai. All the big people know, Lehman Brothers crisis. They won't start selling. And see this big seller, first big seller. Distribution. Who's going to distribute? Big players, institutional players, mainly. I'm not saying that there will not be even one retail individual investor. I should not undermine that capacity as well. There can be some amazing individuals who are retailers as well, but comparatively very less is what I can say. Percentage-wise, very less. Okay. Then a little bit, not even a lot, a very little bit uptick, and then wow, dhadam. This was directly the panic phase. Participation phase and panic phase, you can see it's almost seamless. There was very less uptick. Correct? Here, participation and panic almost went down in one line. What does this chart tell us? This chart tells us that whatever we are going to do as a textbook example, will it exactly happen in real life? So we have to keep our mind open. So what I'm going to do, even if I teach you chart patterns, textbook will, that image will be fit into your mind. Will it be exactly the same in the markets? No. You have to keep your mind open for interpretations. Okay, थोड़ा सा इधर-उधर होगा, little bit here and there it is going to happen. Is this okay? Have you understood the concept of Dow theory? Yes. So whenever you feel that now it's all over, now I've just completely lost the opportunity to invest, just console yourself, you have lost the opportunity. It is okay. It will come down someday or other. When market was at 18,500, everyone including me, right, that it will now go to 20,000. Because what happens is that at that time, only all the good news are flashing in the media. Your thought process does get hampered because of the news. There's a lot of noise around us. And it's very difficult to wear a noise cancellation for all the news, which is buzzing around you. And you get impacted with that. So whenever you feel that it's just going crazily, take a seat back and say, it's okay, let me wait a little bit. Right now you can see what's happening in the market. Once it starts going down, yesterday market closed somewhere around 15,728. Point mein samara. Okay, 15,728 it closed yesterday. Now once it has closed below 16,000, people will be like next support 15,800. If it closes below that, then 15,500. Next target is 14,000. Okay. And then people will have all sorts of different targets. Once the market starts to fall, there will be news only about fall. And all the bad news will keep on buzzing. I did a live stream, yes, day before yesterday, when I said that market has fallen quite a bit now. This is not a good sign for a trader, who's always a bull kind of a trader, that should do swings on the upper side. But for an investor, such markets can be good. Because the investment theory of 1/5, 1/5, 1/5 can work really well in such falling markets. And that is why I done the stream telling that I'm going to put my 1/5, and I did invest my 1/5 day before yesterday in 5 stocks, which 5 stocks also I told in the live stream. And I said that hopefully I'm proven wrong, but I can see that maybe 14,500 I can see. And those who have done basics of stock market, in that class also I told a very similar level. I can see that. Even in a technical analysis class, I tell you why I said 14,500 in the live stream. I'll show that also. Why I got that feeling of 14,500. But then in the comment section there are so many learned people who will say, I think it's technical analysis. He doesn't know anything about technical analysis. Market will go down to 8,000. So everyone has a right to make their own opinion. But once market starts falling down, that is where we understand all this euphoria is going to kick in, and people might go on maddening. They can go short, and they can get trapped like anything. So if it has fallen, can I say markets have fallen drastically from 18,000 plus levels to it's almost 2,000 points fall? It's not a joke. Still macroeconomics are bad. Am I denying that macroeconomics are bad? Not at all. But what have we learned in this chart? Tell me. What have we learned in this chart? Is this going to go straight down? Will it see some bounce back? So even if I'm saying that it might go down, I do see some bounce back also. Is this okay? So very important point that we have learned in this, that yes, as per the Dow theory, there are going to be phases in the market. The accumulation phase, the distribution phase, the panic phase, every phase is going to come up. But we have to be careful and we don't have to get trapped. The base theory is clear, but with this theory you have understood one point, that with this theory I did not understand where should I enter. That's what I told you in the beginning. This will just tell you about the overall market sentiment. It's more of psychology rather than getting into exit points, okay? But I was sort of telling this to you. Now with this basic understanding, so by the way, Dow theory also tells one more point before we move on to the next one. Dow theory says that indices must conform. What do you mean by indices must conform? If Nifty is doing good, again, will this hold to every single time 100%? No, but majority of the cases. If Nifty is doing good, ideally, Bank Nifty should also do good. I have never seen a case where over a period of let us say 2 to 3 months, Nifty is hitting higher highs and Bank Nifty is hitting lower lows. Small time frame it might happen, 1 day, 2 to 3 days, but 3 months back to back will not happen there. Okay, so here I've also given an example, like Nifty started the uptrend on 22nd April, Bank Nifty also started the uptrend on 22nd April, Nifty made a high on 19th October, Bank Nifty made a high on 25th October. Now are Nifty and Bank Nifty related? If you just want to see the pictorial presentation as well, just see this from this lower point to this point. Okay, so can I say one big jump and 1, 2, 3? Correct? So which sector is this? How can we are going to learn everything. First let's understand the basics. Okay, so one big move and 1, 2, 3 down better. This is for what? Nifty. Now shall we see how does the Bank Nifty look in the same period? Bank Nifty in the same period. One big move, 1, 2, 3. Is it going similar? Yes. So that's what Dow says, that when sectors are definitely related to the economy, they will be moving in a similar direction. Can I say banking is very well related to the economy? It will do good when the economy is doing good. People will take more and more loans. People will deposit more and more money. If things are not going good, if there's a recession, banking sector might not do well and overall economy might not also do well. Okay? Chalo, with that, let us move on to the price action. Now we come to something practical, very important. So just come to this line chart. Wait. There was one point in between our. Not there in my printed notes. It's okay. I guess it's about application of technical analysis. So I'll quickly tell that. Application of technical analysis. Why learning technical analysis is important? Can you apply this only and only for stocks? You can apply that for any asset class which is traded on the stock or which is traded on any market, not only stock market. In simple words, technical analysis, can you predict the movements in stocks? Yes. In commodities like gold, say yes. In bonds, yes. In crypto, yes. Okay, so technical analysis can be used for any asset class which trades on some market. That's it. examples not only of stock market, I'm also going to give you examples of bond market, of commodity market, of crypto, everything, all examples are given. So you get an understanding how these are working in different asset classes. Okay? So with that, as I mentioned, let's move on to the next point, which is price action. This is a word which all the technical analysts use, and they say I take positions based on price action. Okay. Now what is this price action? How do we analyze it? How do we interpret it? Is what we're going to learn right now. For this price action, we have to understand how can we understand the price of any stock. I missed out on that bit. Please go back to that theory. We did cover 4.5 point, we missed out. You'll see the Dow chart, and after the chart you'll see this. Averages must confirm, which was the example for that. Bank Nifty and Nifty, correct. But very important is also volume is important. Now what do we mean by volume? And how can we see that volume is also what we are going to learn? Okay. But volume is basically how much buying and selling happened on that day. In simple words, if a stock is trying to, let's say it's moving from the range of 95 to 100. Let's understand this. It moved to 95, came down, again moved to 95, again came down, again moved to 95, again came down. What is happening? This I can call it as a resistance. Why resistance? Is it able to go above 95? No. So it's going from below, it's going to 95, there's a selling. Again there's a buying, there's a selling, there's a buying. Now wait. At this point, at the resistance point, you can see that the price moves above 95. You see that the price closes at 97. Question is, when this big move happened from let's say 94 to 97, how many people participated in this? If a lot of people participated in this, can I say it came with good volumes? Okay. From 94 to 97, very few people. Intraday might have covered it off, but very few people actually held it. Can I say if volumes are low, there is no strength in that movement. It might be a temporary. So all these technical analysts call that as a false breakout. What is the difference between breakout and early indication? Early indication of breakout versus false breakout. Ideally, this can be a good breakout if it breaks the resistance with good volume. Ideally, it will go in the same direction. But if it breaks with poor volumes, chances that it might be a false breakout are high. Means that it will come down only maybe. Is this okay? Yes? So, is this only delivery volume? Is this intraday volume? On trading view, it's very difficult to understand out of that, whatever volume we can see, how much was intraday and how much was delivery. We can just see the total volume in intraday charts, in the trading view charts. If you want to see the delivery percentage, then you have to go to NSE website. At least I know only NSE. Can we see delivery percentage on in the trading view? No. On NSE website, we'll have to go and then check out of the total volume, how much was the actual delivery taken. So I can say primarily important is the volume only. Even if volume is good, I'm happy. If you want another confirmation, एक तो higher volume, on top of that delivery percentage is also higher. That's like सोने पे सुहागा. Gives me a second confirmation. But for primary confirmation, checking only basic volume is good enough to kickstart. So if you want to write down, volume is important. Which volume first you can check volume during the day. Total how much was traded during the day. Okay, total trading volume during the day. And which website am I going to use for that? Trading View website. I'll show you. Trading View website. In that we can easily come to know how much is the volume. What is the meaning of volume? Number of people, number of shares which got traded, which changed hands during the day. Okay, now wait, one basic one. One buy and one sell. One buyer and one seller, no? So I sell, you buy is equal to one volume. It's not one selling and one buying is equal to two. Volume is one transaction that took place. Is that okay? One share that is being changed. But had it been 10 shares and selling 10 shares she's buying, how much is the volume? 10. It's not one transaction. How many shares changed hands? That is the volume. That is the trading volume. So if you want to write down the meaning of volume in simple words, number of shares. Okay, could it be different bonds? Instead of shares, could it be bonds? Could it be crypto? Yes, it could be anything. In our example, it is shares. Number of shares that changed hands. He's asking, does Zerodha have any broker? Says Zerodha, do you have the right to show how much is the intraday volume or how much is the delivery percentage and all that? It's not about the rights, it's about do you have the API for that? Okay, so if you it's as good as you purchase data from NSE website and you showcase on the portal. That's it. Okay, primary data you'll find on NSE website, BSE website.